welcome to all of you. My name is Mirchandani. I'm delighted to be your host for today's webinar on Bonds Express by IndiaBonds, which is an investor education initiative. The business world is constantly evolving, and it is quite arduous for investors to keep up with the latest industry trends and opportunities. We at IndiaBonds is on a quest to make the bond industry more accessible and transparent in India. In today's webinar, we interact with the management of one of the most eminent companies, which is part of the Muthoot Papachan Group, Muthoot Mircofin Limited, which is one of the leading and fastest growing microfinance institutions, which is an NBFC-MFI in India. The company focuses on providing micro loans to women entrepreneurs with special in the rural regions of India. Now, without any further delay, let me take the privilege to introduce you to our esteemed guests, the forces behind the company, and today, which is one of the biggest NBFCs MFIs. I would like to welcome Mr. Thomas Muthoot, who is the promoter and managing director of Muthoot Microfin. Welcome today, sir. He holds a bachelor's degree of Bachelor of Law degree from University of Kerala. He is on the board of several companies like Muthoot Capital Services, Muthoot FinCorp Limited, Muthoot Housing Finance Company, and Muthoot Hotels Private Limited. He has over 37 years of experience in the field of financial services. Our next speaker is Mr. Praveen T. Welcome, who is the CFO with Muthoot Mircofin Limited. He's been associated with the Muthoot Papachan Group for over 10 years. He is a chartered accountant and over a decade's experience in the finance, accounting, and management roles. His profile caliber lies in his demonstrated history of working in the financial services, spearheading the entire strategic finance and accounts, managing reporting, and operations management. Our third guest is Mr. Udeesh Ullas, who is the Chief Operating Officer. He holds master's degree from Ariston School of Business. He has been associated with Muthoot Papachan Group for over 15 years. He has over 19 years of experience in the retail banking, debt management, and microfinance. Prior to joining the group, he was associated with Cochin Bridge Infrastructure Company, ICICI Bank, and Fullerton India Company Limited. And our fourth guest is Mr. Sadaf Sayeed, who is the CEO of Muthoot Mircofin Limited. He's been associated with the group for almost 12 years now. Prior to this, he was earlier associated with HDFC Bank, IndiaBulls Credit, GE Countrywide Consumers, Satin Credit Care, and Spandana Spurti. Overall, he has over 22 years of experience. A very warm welcome to all our panelists today.
So we are part of Muthoot Papachan Group. We have over 136 years history of business. And this is the third generation which is running the business. Mr. Thomas Muthoot is the managing director for Muthoot Mircofin Limited. He is on the call. And along with him, Mr. Thomas John Muthoot and Thomas George Muthoot represent the family. And this is the third generation which is running the business. And while the group has diversified business interests, but the financial services is the key forte. We have been operating in the financial service more than 50 years now. And on the financial service, we have 4 large NBFCs who is catering to various segments. And in that, Muthoot FinCorp Limited is the flagship company, which is one of the largest gold loan companies in the country. And Muthoot Mircofin Limited, the company which I am and my colleagues are representing, is a subsidiary of Muthoot FinCorp Limited, and we are the microfinance arm for Muthoot Papachan Group. And we have a fellow subsidiary, Muthoot Housing Finance Limited, which is operating in the affordable housing segment. And we have Muthoot Capital Services Limited, which is an independent company operating in the two-wheeler and small car financing space. And as a group philosophy, how we operate is that the promoters give us the guidance and vision and the money to operate, and the professional like us is running the company in terms of day-to-day operations. And in Muthoot Mircofin Limited, the promoters have supported with around 342 crore capital over the years, and supporting us in terms of the vision and going forward. And the uniqueness that we wanted to highlight here is that in terms of Muthoot Mircofin compared to any other MFI, we are not just coming with a one simple product. Actually, all the group companies in the table are operating in the same segment, which is the low and lower middle income segment. And while Muthoot Microfin becomes the first vehicle to enter the clients into the formal segment of lending, but as they graduate in the various cycles of life, we can offer them with multiple products like Muthoot Mircofin Limited can offer gold loan and other SME loan. The clients can take two-wheeler from Muthoot Capital Services, and we can also offer affordable housing loans to these clients to our housing finance company. And all this while Muthoot Microfin remained the first touch point to the client, and we Muthoot Microfin earned some commission revenues out of all these cross-sell business. So this is the basic difference that we see from any other standard MFI and Muthoot Microfin Limited, because from the same platform, with the support of all the group companies, we can offer multiple products to the same segment, and we can earn revenue out of it. And that is what we are also pitching to our client, that this is not just a microfinance company, this is a life cycle solution provider company compared to any other institutions. And while we come to Muthoot Microfin specifically, we are the fourth largest NBFC-MFI in the country, and we are one of the leading players in the South India, southern market of the country. We are market leader in Kerala, we are the market leader in Tamil Nadu, we are a dominant player in Karnataka. And at the same time, we are growing across the country, north, east, and west. And currently, as on September, we are managing 10,800 crore portfolio, and 95% of our portfolio is income generating loan. And we have a network of 1,330 branches operating in 329 districts in 18 states and union territories. And currently, Muthoot Microfin is rated A+, and we have the highest grading M1 C1, and both the rating and grading is assigned by CRISIL. And currently, Muthoot Microfin has a 3.2 million active clients. And one key difference that we are bringing onto the table compared to other entities is that the technology and enhancement that we are bringing. So we have a Muthoot Mahila Mitra proprietary customer app, which has been downloaded by 1.4 million active clients. And this app helps the clients to interact with the company directly. They can check their loan track record. They can raise any complaint. They can request for new loans. But the most important point is that they can also initiate a digital payment through this app. And this is helping us to digitalize a lot of our collection. Last year, 20.3% of our collection comes in digital form. And incrementally, we are collecting more than 1/3 of the collection in digital mode. So that is one differentiator that we see from Muthoot Microfin Limited compared to the other MFI players. And another important aspect is that we are not only employing technology on this aspect. We use the technology in onboarding of the client also. We have a proprietary in-house credit scorecard, which we are using to onboard the client, which is also has been developed with the Highmark Credit Bureau. So that is we are employing to onboard the client, which improves our performance in terms of portfolio quality. Currently, we have 2.37% GNPA and 0.33% net NPA with an 86% provision coverage. And the portfolio, along with the portfolio performance and the growth, the return metrics also improving. And in the half year of the current financial year, we are reporting a 4.2% ROA and 23.7% ROE. So while we touched upon the company, we just highlight the journey of Muthoot Microfin Limited. So we started the operation of Muthoot Microfinance in the group in 2010-11. That is when the current CEO, Mr. Sadaf Sayeed, has joined the group. And while we started the business, and Udeesh also was there on the day one. And when we started the microfinance activity, we started as an SBU under FinCorp Limited with a clear understanding that we will diversify it into a new entity. And that entire process of new entity creation and licensing, everything completed by 2015, and we started microfinance operation in the new entity, which is Muthoot Microfin Limited, from 2015 onwards. And in 2016 December, we bring in our first private equity investment into the company through creation investment. They invested overall 155 crores into Muthoot Microfin Limited at various intervals. And in 2018, we did a right issue of 220 crores in which our promoters also contributed, and creation also participated in that investment. And while we come recently in 2021 during the COVID periods, we brought in another private equity investor into the company, Greater Pacific Capital. They invested overall 60 million in 3 tranches. So that has been the journey of Muthoot Microfin Limited. And as of now, we are managing 10,800 crore assets as on September, with 3.2 million active clients and around 1,330 branches. So while the microfinance sector is doing good, it is also due to the overall environment, the regulatory environment as well. So right now, the industry as a whole is facing a good tailwind, starting with the new NBFC-MFI regulation, which implemented in April 2022. So the new regulation paving way to 3 key changes in the sector. One is that the pricing liberalization. The loan pricing earlier used to have a average of 5 largest banks to 2.75 and a 10% margin cap kind of a computation. And the RBI now has relaxed that and given the responsibility of each company board to price their own credit according to their risk appetite and cost of fund, etc. So that has been a welcome change to the sector. And secondly, the overall client segment. So earlier, the client segment was in the rural area was 1.25 lakh household income, and in the urban area, it was 2 lakh household income. And the RBI has increased that to 3 lakh, irrespective of the sector, rural and urban. So the entity like us, where 96% of our clients come from the rural area, actually our target segment has increased from 1.25 lakhs to 3 lakh. So there is a lot more client has come into the system to cater into, and that is also helping the sector. And the third, which is most important, is unification of unifying the entire regulatory umbrella. So earlier, the NBFC-MFI regulation was only applicable to the NBFC-MFI category entity, which is not applicable to banks, SFBs, etc. But right now, it is uniformly applicable to the sector. So any lender, be it bank, SFB, be it NBFC, who is lending to the targeted segment has to follow the NBFC-MFI regulation. And to enhance the risk management in the sector, the RBI bring in a FOIR computation, where the RBI has prescribed that we need to assess the every household, and including the new loan that we are giving to the client, the overall fixed obligation of the household cannot be beyond 50% of their assessed household income. So that is actually brought in and solved a lot of issues in terms of risk management, because everybody will do the assessment, and the overall liability in the household will not go beyond the limit, which is also helping the sector. So I think all these factors are helping. And maybe to touch upon one important aspect is that while we look at the sector, the MFIs are growing, but there is also a catch that the the portfolio in the SFBs and banks also conceding. So they are conceding the market share, and the MFIs are gaining more market share. Now we'll go into the much more detail with respect to the company. So like I mentioned, we are operating in 18 states and union territories, operating in around 329 districts. But we've been started our operation from the south, and we continue to hold our position in the southern market, which is Kerala and Tamil Nadu, where we are the market leader, and we are a dominant player in Karnataka as well. But at the same time, we are diversifying our portfolio network in the north, east, and western regions. So we have added in the last financial year around 250 branches. In the current financial year also, we are adding another 200 plus branches. And during the COVID period also, we have added. So we are increasing our portfolio by around 37% CAGR, but that growth is mainly contributed by improving our network, operating network, and acquisition of more clients. So if you look at the active client has increased from 2.2 million in FY21 to so that is active now. So the active clients has gone to 3.2 million as of now. We have seen a 22% CAGR growth on the clients as well. So I think the strategy is to increase the network across the country, take more market share in the north, east, and western market, keep our market share in the strongholds of southern market. So that has been our strategy in terms of going forward in terms of growth. And like I mentioned earlier with respect to the technology, I think this is one differentiator we would like to highlight compared to any other MFI players. Is we would be one of the very rare institutions where the entire IT infrastructure is working in an in-house environment. So this helps. We have a technology team of 87 people, including developers, database managers, administrative IT infra team. So this is helping us to integrate all our operation end to end in a seamless, paperless environment. And in the branches that we are operating, all the staff has been given with a tab. The branches is computerized, and we don't have to print any paper unless it is a statutory requirement and printed and kept. So that is the seamless operation that we are operating in. And this has been possible with our in-house IT team, and we are the first entity to move into a cloud-based infrastructure from an on-premise-based infrastructure. And these are all benefits of being an in-house IT team. And we are involved technology in our sourcing model, the underwriting model, and even on the collection model. So like I mentioned, we have a Mahila Mitra app, which is installed by almost 1.4 million active clients as of now. And we are collecting around 20%, collected 20% last year, and incrementally around 33% of our collection comes in the digital format. So this is also one key initiative that we are driving across. And the digitalization doesn't mean that we avoid the client touch point. We still continue to do the center meeting, which is there on this as a practice. But what we are trying to do is that the cash coming in on the center is we are trying to eliminate it to digital. And secondly, this will help us to reduce the overall turnaround time. So the digitalization not only helps on this aspect. This is the digitalization also helps on the treasury side. Also, there is an advantage because when we collect cash, it is traveled down and deposited into a payment bank or bank. Then it is centralized pool. So the overall collection comes into our centralized bank for further utilization takes couple of days. So the digitalization, when through digital channel, the money comes on the same day, same time, immediately to our bank account, and we can further use that money for deployment into disbursement or further action. So that is also saving there, and this is also increasing the overall productivity of the staff. We have a concept called Adarsh branch. We have currently around 116 Adarsh branches where the about 80% of the collection comes in the digital format, and we are adding more and more Adarsh branches every quarter into the system. And what we are seeing is that the productivity in the others branches is much higher, where they handle around 52 loan account disbursed by relationship officer, but the average is around 37. So that the productivity is improving. And secondly, the delinquency on those branches also coming down, because their center meeting get over much earlier. They don't have to follow up on the bank and things like that. So they get more time to follow up, etc. So that the overall productivity in the system is increasing, and which is helping us to reduce our turnaround time also to more than 4 days to less than 3 days, and reducing the OPEX from 64% cost to income ratio to 51%, and further it is now come down to around 47%. And the loan officer efficiency also increasing, where they were handling around 408 loan accounts. Currently, they are handling 442 clients. And the technology that we are using, not only at the collection level, we are also using it in our underwriting and client sourcing. So like I mentioned, highlighted earlier, we have a unique credit scorecard where all the clients is going through, and we take various parameters, around 30 parameters of each client set, and we assess the client and make the client into 3-4 categories. So low income and very low income, medium and high risk. So we don't lend to the high risk customer. We try to cross sell some gold loan and secured product to those segment of clients. In the medium clients, we reduce the ticket size. We try to give some partly secured loans, or we do loans with a differential. If they have a vintage with us, then we do it at a slightly differential pricing. And in the low and very low risk customers, we increase our ticket size, maximize our wallet share on those segments. So in the lending parlance, I think we have two mistakes to make. One is to lend to a wrong customer, which anybody can make. But the second mistake is more fatal, where we lend wrong amount to a good customer. For example, if we have a good customer who is capable of handling 1 lakh loan, a rupee loan, but we give them a 50,000 rupee loan. So we are actually losing out of those clients. So we are trying to address that problem through our scorecard. And another important aspect in our overall risk management framework is that every branch of ours has a separate credit manager, which is a unique concept in the sector, because even though the large portion of our credit decisioning is automated through the system, but we need to do the household income verification, we need to do the post disbursement client, the utilization check, we need to verify the phone number through OTP, we need to do the house visit of the customer, etc. So for that purpose, we have brought in a separate credit vertical, and we have a credit officer at every branches of ours. So what this brings is that the credit officer doesn't have any incentive on disbursement. They just need to focus on the quality and underwrite the client and onboard the right set of customer for us. So that is one unique aspect that we have instilled in our operation. And we have a separate independent audit team apart from our statutory and internal audit team. We have our own internal audit team who has going around and auditing all the branches on a bi-monthly basis. And we also have a separate collection team which focus on delinquent clients. This will reduce some burden on the normal branches, because they just need to follow up till clients up to 30 DPD. Anything about 30 to 90, a telecalling team will take over, and they do a telecalling, and the pickup will be done by the field team. And once it is closed into a 90 DPD bucket, then we have a separate collection team who will be following up on the clients. And above 180 days, we do the arbitration and the legal process, etc. So what we are trying to do is that we are separating the overall collection ambit between different teams, so that we get the right kind of feedback from the delinquent client. If there is any issue with the relationship officer, everything get populated and come to the HO as a feedback. So that is what we are trying to do. And this is helping us to reduce our delinquency. So we have 7.39% GNPA. In the peak of COVID, it has come down to 2.37%. And right now we have 0.33% as a net NPA. And if you look at our overall staging, also improved substantially. The stage 1 assets is currently contributing 97% compared to 88% in FY22. And the stage 2 asset is stagnant at 60 basis point, and stage 3 assets is coming down currently for us. And this is mainly due to the performance of the post-COVID portfolio. So right now, 97.29% of our overall portfolio is a disbursement which has happened post the COVID wave, that is post June 2021. And that portfolio, the GNPA out of that portfolio is 0.67%. So that portfolio is performing exceptionally well for us. And this has been mainly due to the scorecard and various interventions that we have done. And wherever the disbursement has been done using the scorecard, what we see is that the fresh delinquency is very, very limited. And that is helping us to improve the overall portfolio quality. So while we come to the corporate governance and the management, we have a 10-member board, and it is well represented from all 3 segments. We have 3 directors from the family, Thomas Muthoot, Thomas John Muthoot, and Thomas George Muthoot. And we have 2 representatives from the investor community. Mr. Akshay Prasad represents GPC, and Mr. John Tyler Day represent the Creation Investments. And we have 5 independent directors, and all of them are expertise in their own field. Like Mr. T.S. Vijayan, who has been the ex-IRDA LIC chairman, Ms. Bama Krishnamurthy, madam, has been ex-SIDBI and CGM SIDBI, and currently the vice chairman for the Catholic Syrian Bank. And we have Ms. Pushpi Murugan, madam is a ex-NASCOM number and a cost accountant, and the IT angle comes to that. And we have Mr. Anand Raghavan, sir has been an ex-EY and ex-Sundaram and a chartered accountant as well. And we have Mr. Alok Prasad, who's been an ex-CEO at MFIN, which is the regulatory body for, self-regulatory organization for the microfinance network. And he is very expertise in the microfinance as a segment, very well in the sector. And while on the governance side, all the directors has been operating in the system for more than 5 years, except Anand sir, who's joined 2 years back. All other independent directors are operating more than 6 years in the system and guiding us in terms of going forward. And very important aspect is that while we have investors coming from in the form of private equity, etc., the promoter family and the FinCorp Limited, which is the holding company, continue to hold the majority in Muthoot Microfin Limited. So overall, the family and FinCorp together hold 69% stake in the company, and the balance is held by the private equity investors and ESOP holders. So while we come to the management, we have very experienced management and very long-standing management. And our CEO, Mr. Sadaf Sayeed, who is the founding member of Muthoot Mircofin Limited, he's been with the group now more than 13 years, and who's the one instrumental in starting carrying on the vision of Mr. Thomas Muthoot. And he's a qualified MPA, and prior to Muthoot, he has been working with Spandana Spooty for some time, and then he had a stint with HDFC, IndiaBonds, G Money, etc. So overall, more than 23, 24 years experience in the banking and financial service sector. And myself, Praveen, I've been with the group now more than 10 years, and I'm a chartered accountant by qualification, and prior to this, I worked for around 3.5 years in an engineering automation firm. And we have Ms. Neetu Ajay as the company secretary. She's been with the company more than 9 years. And Mr. Udeesh Ullas is the chief operating officer, is a MBA by qualification. He's been with the group for more than 15 years. And prior to Muthoot, he's also been working with ICICI Bank, Fullerton, etc. So more than 20 years experience in the financial service sector. And we have Mr. Subhranshu Patnaik, who's been with the group now more than 10 years. And overall, he has an experience more than 22 years. And we have Mr. Jinsu Joseph as CRO, and he's been with the group now more than 7 years. And he's also a chartered accountant by qualification. And prior to that, he's worked with Tamil Nadu Mercantile Bank and more than 13 years in the financial service sector. And we have Mr. Linson Paul, who's acting as our CTO and more than 20 years experience, and he's been with the group now more than 2 years. And we have an employee base of 10,227 people. And currently we have more than 11,000 people, and we have a people-centric organization, and this has been certified. We have been certified by Great Place to Work consecutively for 5 years for our employee-related activities. So all these are giving a better financial performance on Muthoot Microfin Limited. I think the COVID years has been slightly muted years, a couple of years, but still we have performed well in terms of we have never reported a loss in any of the periods. And this is mainly contributed by 3-4 factors. One is the growth has come into the system. We have been growing 37% CAGR, including the current half year. And the NIM and the yield also has improved. Post the new regulatory environment, we have revised the pricing based on risk, and which is also helping us to improve our NIM. And the third important aspect is the cost to income ratio. During the COVID period, like I mentioned, we have put in a lot of branches in northern territories, east and west, etc. And we have done a lot of technological investment during the period. And as we coming out of COVID and doing more disbursement, taking more growth, we see our cost to income ratio is also coming down to around 46%. And we expect that to continue the reduction in the cost as we have more disbursement coming in our newer branches. And all of this is contributing a better ROA. We are currently reporting 4.17% ROA, close to 4.2% ROA, and around 23% ROE. And the important aspect is that last 3 quarters, including Q4 of last financial year, we are consistently reporting in and around 100 crores of profit. So that I think what we believe is that all the factors contributing, which I mentioned, we believe that we can continue this momentum going forward as well. And this is another step with respect to the capital adequacy, the asset quality that we have. We just touched upon that point already. And the better portfolio quality will also helping us to give a better returns to returns. And the GNPA is come down to 2.37% and 0.3% as the net NPA, and stage 1 assets are improving. The capital adequacy of the company is 20.46%, which is comfortable for us in our operation. And all these capital is a tier 1 capital. We have not raised any tier 2 capital. So that is one avenue we have to raise more capital, tier 2 capital into the company, which can boost the capital adequacy further. So while we just look at some of the competitors, we have posting better growth compared to the competition that we have in the long term as well as in the short term. So last year we grown by 47%. This year we are growing around 36% compared to the industry. We are performing much better in terms of growth rate. And while we look at the credit cost, we separated into between long-term credit cost and a short-term credit cost. In the long-term credit cost, we have an average of around 2.9%, which is the COVID period, pre-COVID period, FY 21, 22, and 23. and we are one of the lowest credit cost across the industry players. And while we look at the short-term credit cost also, we are one of the best in the industry. Uh, and in the while we look at the overall cost structure, we look at the OPEX and credit cost in tandem. And we have one of the best ratios in terms of OPEX plus credit cost. Uh, uh, in the OPEX side, we have slightly higher OPEX compared to some of the players because, like I mentioned, we have put in the credit scorecard and other the credit officer at the branches. So generally, we will have slightly higher OPEX compared to the other players, but that we compensate on the credit cost because that is something which is not controllable for us. But we can always look at avenues to reduce the OPEX. And while we look at the productivity per branch, we are at 8 crores per branch. We still have avenues to grow there. And as our northern new branches improve more efficiency, take more disbursement, that is also will help us to increase our overall branch per branch portfolio, which will again help us to rationalize on the cost side. And the credit cost that we discuss is not on the cost of the provision coverage. We still have one of the best provision coverage ratio in the sector, and the net NPA also is one of the lowest in the sector. And while we look at that is also we are also giving best returns in the sector, and the ROA of around 4.2 and 23.7% ROE. And definitely we have a higher leverage compared to the other players, but that is where we are working on going. And one more important aspect is that we are one of the best rated entity in the sector. Currently, Fusion also A plus rated by CRISIL. So being one of the best rated is helping us to source more funds, get more funds at a cheaper rate, etc. So that is one stronghold that we have. And we have a customer app which is unique in the sector. We have more than 14, we have close to 1.4 million active clients who has been downloaded as our app and using that. And which is also helping us to have a better customer retention. We have one of the best customer retention ratio in the sector. And one of the most important aspect is that while we look at some of the competitors, we are one of entity where the vision and of the promoters still carried. In all other entities where the promoters are diluted during the IPO or they have sold off the business, and here an entity where the promoters still will hold majority, and they continue to give their support in terms of vision and carry forward this business. And while we come to our funding source, we have raised more than 34,000 crores money in Muthoot Microfin Limited over the years. And we have raised all this money without any corporate guarantee or a promoter guarantee, and all the support from the investors like you. We have accessed the capital market in terms of raising debt. The largest contributor to our funding source is the term loans from banks. At the same time, we draw money from financial institutions such as NABARD, SIDBI, Mudra, etc. And we also do securitization transactions such as PTCs, DAs for our funding source, and we do ECBs also. So, and while we come to cost of fund, we have seen a 50 basis point increase in our cost of fund, mainly because of the base rate increase. But incrementally, the borrowings are coming at a much cheaper rate. So what we believe is that the cost of fund is currently maxed out and start coming going forward from the next quarter onward. So that is what we are expecting in terms of our cost of borrowing, which will also help us to reduce, improve our yields and improve our NIMs. So while we come to the ALM, we don't have any asset liability mismatch. The borrowings that we mentioned from banks, financial institutions, structured, all these are coterminous to the assets that we have generating. At the same time, we have larger tenor borrowings in the form of NCDs, ECBs, etc. So we have a comfortable ALM mix, which is helping us, and there is no concern on the ALM side. So while we come, we have a rural focused operation. Like we mentioned, our overall clients has been growing 22% CAGR. We put in some key initiative to our client segment, looking at the requirement of the clients, such as e-clinics, where during the COVID we feel that one is the health of the clients and their families, one of the key aspects. So we put in around in our around 358 branches, we put in an e-clinic where we have separate desk has been provided, where we facilitate a call between the client and a trained doctor. So that's one facility that we are doing, and almost 5 lakh consultations of the clients and family has been already done on through this e-clinic platform. Secondly, is one risk that we see in our sector is the natural calamity that occurs, and we are currently taking natural calamity insurance for our clients, and incrementally we are taking it for all our clients, the natural calamity insurance, which will protect our clients from any unforeseen natural calamity events. And with that, I will come to the conclusion. We Muthoot Microfin Limited comes with very strong parentage, with a legacy of 136 years, with a strong brand, and we have a market leadership in the sector. We are the fourth largest NBFC-MFI in the country. We have a network of 1,330 branches. We are the market leader in Kerala. We are the market leader in Tamil Nadu. And the focus for us is the rural underserved market. And we have using the technology effectively in all the operational aspects. We have the in-house team which is supporting us in terms of that, the digital collection, the Mahila Mitra app, all helping us to reduce the cost, the customer retention, serving the customer better. And we have a very robust risk management framework where the scorecard has been implemented and helping us to select positively on the client segment. And we have the strong audit team and the collection team, which is helping us to improve our NPAs. And the next aspect is to we have the access to diversified source of capital, and we can manage the cost of fund well. Even when we seen around 250 basis point increase in the base rate, the cost of fund increase has been 50 basis point in the company. So I think we are mitigating the cost of we are having an effective system to borrow the capital, and we believe that we can continue borrow going forward for our growth. And we have a strong corporate governance practice with support of promoters, and we have a professional management team who runs the business. So with that, I'm concluding the presentation on Muthoot Microfin Limited.